Welcome everybody. Just giving it a few more minutes that everybody can stream in. Can give it a few more seconds, guys. All right, I think let's get started. Everybody, thank you for making the time as always. This is Thinus. Still haven't been able to resolve the picture issue, so if you see Mark's picture and my name, don't be confused. For those of you that are new, welcome to the live session. Ash will be joining me as always and taking you through the Earth and Sky, and I'll take you through the M2 setups, and we'll have a look at some of the usual suspect charts as well. So welcome everybody, let's kick right off. All right, can everybody see my screen? Just anybody?
Yes.
Thanks, Ash. All right, just taking you or building upon my blog post on Sunday. Hopefully some of you had the time to read it. And I just want to make quick mention about Forex seasonality. So this chart over there that you'll see there, this monthly performance heat map, not necessarily Forex, but it's the same idea, the same theory behind it. And the idea is that at certain times of the year, you can see the months marked there over the top there, certain assets or certain asset classes or products tend to strengthen or weaken. And it's got to do with seasonality, it's got to do with trading strategies, rebalancing of books, countries, trade agreements with other countries, etc. So a whole bunch of factors that leads to a general, and again, capital general idea in terms of strengthening or weakening. So if we have a look at this chart over there, and you can, I'm going to point you to the US dollar index. So not a trading pair per se, but you have the US dollar index, which is the DXY chart, which we'll look at now again. And you can see there that the higher the percentage is there, the higher the decimal there is, the stronger it gets, and vice versa, the weaker it gets. So if we look at June, where we're currently in now, the US dollar index tends to weaken by negative 0.3%. July, it really weakens, and then of course August starts going up again. So winter months, as seasons start to change in different parts of the world and trade opens up, etc., you can see the general seasonality of what's going to happen to the pair. And you can use, there are tons of resources out there, guys. I gave you an example on Sunday. This is just one more example. There are millions. You've got gold here, silver there, and you can do your own homework. You can go back in time and see if this is really true. This is pulled from real data, but gives you another confluence, another reason to believe that a certain, let's say in this case, the US dollar is going to weaken this month. Maybe next month you're really waiting for shorts. You're shorting the US dollar next month because of this, etc. So just one more clue to help you with your trading pairs and your trading setups, not to be used obviously in isolation or using it as a kind of blind dartboard on your pairs, but another nice little tool in your arsenal. I'll post this link in the forum. You can see they're very, very interesting, and you can read further about the theory behind it, how it's calculated, and they've got some historical data there where they show you how they got to that data. So again, another little quiver in your bow to help you with your confidence. So that's Forex seasonality. Any questions, just drop us a question in the forum. All right, let's have a look at some of the other charts. So the big one for me this week is the DXY chart, the Dixie chart. And I've been saying, I know it's knit one, skip one, so every second week that I see you guys or speak to you guys. But big area, I pointed this out to you. I can just having a quick look through the attendees. I see a lot of you that have been here before, and you can see still at this big area, what I pointed out to you the last time, very unlikely that price was just going to smash through there and continue down. Price has to test and retest, and that's why you get these kind of tests and retests, big areas or big price levels before. So big area, price bouncing off, try it again, needs to find more sellers. It needs to find sellers at a better price, and that's exactly what we got here. So this week we had, and this was on Sunday when I did my analysis, you've got this big bullish bar closing above the 200. So it's stuck. Price tried to break down yesterday, couldn't. And today you've got a little bit of a rally off this 200. So DXY chart, of course, dollar index chart, dollar strength today. So where would it likely go to? Well, if I just have a look at the chart, area I'm looking at is this 105, 106 kind of area. So it's big. Stop there. So anything in this kind of area over there as a good test, potentially, if for whatever reason it breaks back down under the 200. So this kind of idea, of course, we're looking for dollar weakness. So what I was saying on Sunday, we've got to be patient. Could it go up to this area? Yes. I'd like to see this candle today close bullish. You can see these previous candles there, these long wicks. A lot of selling pressure at this kind of level where it is now. That makes sense over there. You can see those little wicks. So a lot of selling pressure in this area. I'm waiting for this to close bullish, perhaps even a second bullish candle close tomorrow. And then, of course, looking for dollar setups on your trading pair. So DXY, keep an eye on this one. Above the 200. Could it fall back down? Yes, if it does, exactly the opposite. Waiting for bearish closes, pull back, and then the move back down to retest this area. I still do believe, my personal bias is that later this year we will get this kind of idea. It's just obviously not super quick, and we're not sure exactly if it even will happen. But that is my kind of bias for the year. Retesting these kind of areas, but looking for longer term dollar weakness. Right, we'll get to the questions a little bit later. It's a bit of a longish question over there, Yolandi. I'll get to you now. So keep an eye on the Dixie chart. We're looking for a longer to medium term dollar bias. All right, so SPX, you can see nice bullish close. Let me just remove all these drawings there for you guys. You can see in this big area, and I pointed out to you last time, no real fundamental catalyst for the SPX. SPX, of course, very tech heavy, so risk on type of asset class, 500 biggest companies in America. You can see in this big area, and again, make your mind up kind of area. Do we get this or do we come back down? This could be very determined by the inflation and interest rates from America, but at a big area for the SPX. Oil, again, at those big areas, you can see a lot of the asset classes now into big areas where consolidation would more than likely take place before we see an extended move up or down. So oil in a big area, you can see there, testing. I don't trade oil, very politically motivated. I read a story this week about Saudi Arabia, which is obviously one of the big oil producers, limiting production for a while, which of course would influence the price and more than likely push it up. So very, very tricky. In a big area for oil. Gold not helped, of course, with the dollar strengthening. So again, what I was saying on Sunday, stronger dollar, this will affect many asset classes such as gold. Gold gets priced in dollars. So hit the all-time high. And I said to you guys last time, more than likely it's going to pull back. Unlikely that you'll just keep on finding buyers going. Remember, if you're buying there, you need price to get there to make any form of profit. So you need a lot of people buying and pushing it up. More than likely that price will come back down, find buyers at a lower price, Remember, at the most basic level for Forex trading, you're trying to buy as low as possible and give it back to the market as high as possible. So the higher you buy, the less potential profit you're going to make. And that's why you get typical pullbacks and why trends form. So gold pulling back from the all-time high, still above the 200, breaking below the 55 though. Could see price coming back there and then returning for another challenge at this level potentially. Keep an eye on the 1900. 1800 is another big area that's quite far away now. I'd keep an eye on 1900, 1880, anything around this 200 where we could see buyers get back into gold. In Bitcoin, very interesting. It sold off yesterday a little bit, but with the stronger dollar, you would expect Bitcoin to go down as well, as it's seen as risk on. So in a big area again, and you can see challenging, and then finally falls away. So very typical pattern that you would see on your Forex pairs as well. So you get an initial challenge, you get this little double top formation as price tries, and then eventually it falls away as it gives up. What does it want to do? It wants to find buyers at a lower level and potentially re-challenge this. Remember, buyers waiting to get in at better prices. The lower you can get in as a buyer, the more money you stand to make. So Bitcoin, interesting, selling off a bit again, although, let me just pin this up again, although it is still above the 200, similar to gold. So below the 55, above the 200, could see some consolidation between those two EMAs. This is a big area. If for whatever reason, I know there are quite a few crypto traders still out there, it can break past this 32,000 level, could see an extended move up. Of course, way lower than its all-time high of around $69,000, $70,000. Could see that coming into play a little bit later. Again, fundamentally, not any kind of real catalyst at this stage for the crypto market. Then Ethereum, very similar. Of course, it can almost be the same chart. If we just have a look there, below the 55, above the 200, that big red candle yesterday. If we just do this again at a big area, same kind of chart. First initial challenge, get these two little challenges there, so a little bit of a double top, and then finally price falls away. More than likely will consolidate, potentially challenge this level again. All right, any questions on the charts? We're going to have a quick look at the calendar. All right, looking at the calendar, why I want to show you the calendar again is because this morning, the Aussie dollar interest rate news came out higher than expected. We're expecting a total of 3.85%, and we got a 4.1%. Now, you need to be very careful. What price likes to do is not give you that initial move that you think. So you would think initial Aussie strength, starting to look for Aussie longs or shorts on the various Aussie pairs, looking for Aussie strength. And it's not necessarily that it'll happen quickly. This should change your bias to start looking for Aussie dollar strength, but not necessarily very quickly. And that is why we always say avoid trading the news, because markets like to give you the kind of fake move or the opposite of what you expect. And then a day or two later, when you've been taken out and your stop loss has been taken, then it gives you the big move. So stay patient, wait for the quality setups. You know this should lead to Aussie strength. You just remember, you're waiting for a better price, especially if you want to buy. You're waiting for it to get as low as possible. You know fundamentally the clues are in your favor, and then you're trying to long it. So big surprise in the market this morning, a bigger interest rate increase from the Aussies. We have got Canadian interest rate news tomorrow afternoon. Apologies, guys. From Canada, this overnight rate and BOC rate, Bank of Canada rate statement, interest rate news from Canada. Similar to the Aussie, do we get a surprise? Do we get anything lower? That could throw things off completely, so be careful. This is GMT +2, so London +2, my side over there. So careful about that one. Some Aussie news again tomorrow afternoon, GDP news, quarter-on-quarter. And this RBA is to do with what happened this morning. So the governor speaking about the strategy behind this. So careful for that one. And then Friday, you shouldn't be trading, is employment news from Canada. and Thursday, unemployment claims from America. So just be careful around those ones. Usually not the biggest movers, but they could throw you a surprise like today and throw things off. All right, just to get to Yolandi's question, does Jerome Powell want to see the US dollar drop? Yolandi, the big thing for them is keeping inflation under control. So what they want to do is, or the balancing act that they want to follow is increasing the interest rates enough to curb inflation, but not let the interest rates get out of control. So you don't want too high interest rates, because then it makes borrowing money very expensive. It makes borrowing money for business especially very expensive, and it makes everything else expensive. So if a bread, for example, were to start costing you, let's say, I don't know where you are in the world, let's say it's $10, for example, for a loaf of bread, and interest rates increase, everything that you require to make that bread would increase. What the company then would do is start charging you, for example, $15 for the loaf of bread. So it's got a domino effect. Everything starts becoming more expensive. People start struggling a lot more to buy the essentials, to buy the bare minimum, utilities, housing, your car payments, etc. So it's a fine balancing act between interest rates and inflation. And what the US are trying to do now is curb the very high inflation, which erodes your purchasing power, and pull it back in. So it's a fine balancing act. And you can see with the markets there, if you read any form of news, Forex news for a week, you'd read about the Fed, and are they increasing interest rates? Are they not? Are they increasing it more than what is expected or less? When are they going to start cutting interest rates, which is now a real possibility, etc. So it's always the balancing act between inflation and interest, which is kind of two sides of a seesaw, two sides of a scale, if you will. I hope that answers the question. Yolandi asking regarding the calendar, how do we know which are the most important to focus on? So Yolandi, I use Forex Factory. There's a whole bunch of Forex calendars out there. They're all free. This is just basically a website. And what you can do on Forex Factory is you get this little funnel icon, this little green icon there. And what I do is I just filter for the red news. So the red, orange, and yellow. So red, very important, high impact. Medium important, medium impact relative to your Forex pairs. And then low impact news with the yellow. So I just apply that. And what you get is I filter the week, which you can change there with the dates. You just filter out the week and the red flag news, and that's essentially what I focus on. Just make sure this time is set to your time. You say understand interest rates, just wondering about the dollar. So that would be affected by the interest rate. So if you understand the interest rates, you would then understand that it is a balancing act between how strong do you want the dollar, how weak can you want the dollar. So everything's interlinked. 80% of world trade is done in US dollars. So that's why it affects everybody else. And that's why you would read things like countries trying to break away from the dollar, for example. So all a balancing act, all interlinked, the whole world's trade, all interlinked. So again, there's no strong or weak dollar. It's all kind of relative to what strategy the Fed wants to follow. All right, there's nothing else there. Let's have a look at the M2 setups. All right, so I'm going to start with the Euro USD. And you can see what I said on Sunday as well. Careful to take a long off this area. That was a very, very bearish. Sorry, guys, can everybody see my screen? Just yay, please. Thank you very much. Thank you. All right, so big bearish candle on Friday. And I said to you guys, be very careful. That's a lot of selling pressure. And you can see no real wick at the bottom. So what that essentially means is nobody started taking profit at the end of the day, closed near its bottom. Yesterday, bit of an indecision candle at doji, and today follow on from that weakness. Could it turn around today? Absolutely, we don't know. It's just you trying to catch what I think Pierre used to say here from F&P. It's trying to catch a falling knife. So what you want breaks to start being applied. And when I say breaks, I mean things like wicks. You want to start seeing some bullish candles, etc., etc., So you want this price to almost turn around, close above these EMAs, which I know all of you are waiting for as a reason for the stop, and then look for longs. This still looks very bearish to me right now, and it's very dangerous to kind of just take a trade there thinking that it's going to just turn around. And I was watching this yesterday. I think it was on the 1 hour where it's quite clear, just to show you guys when the news came out. And again, while we don't trade on news, that's very rare. You can see that candle gapping, which is extremely rare on Forex, which usually means something's not quite right. And I say it with air quotes. So price more than likely, and I think, I can't remember the stats, I think it's like 85% or 90% even, that price always closes the gap. So even if you just use that as a reason to wait for this long trade, you can see, do you get this gap close and then it turns around, or does it just continue going down? So basically what I'm saying is, I'm just going back to the daily, be patient with this entry, wait for the signs to be in your favor if you're looking to long the Euro USD. And again, think back to the DXY chart I just showed you. There is no signs right now that it's going to be bearish. Back there. At this stage, wait for that maybe to break below the 200, for example. And remember the chart I just showed you with the candle above the 200. So wait for that maybe to break below. Then you start looking for breakout, pullback, and then you're looking for these long signs. So main thing is stay patient. You can start trading this like a bit of a range. I showed you on Sunday as well, this kind of range. And you're looking at one spot 1066 to short. And again, this area there, barring that it turns around, to look for it to come back up. So up, down, up, down. If for whatever reason the DXY continues to running and you see more weakness, we're looking for plan B, breakout, pullback, and then we're looking for lower targets. And this is a theme for most of the M2s, crosses and majors this week, guys. So keep that in the back of your mind when we go through the rest. Looking at pound USD, very, very similar, not quite in the area. So you're looking for price to start slowing down at the 1.23, nice round psychological number. 55 is above it, so you might want to wait for this to turn down. So if this, for example, goes down today, you have 55 just above it. Wait for it to break back above. Bullish signs again, you want bullish closes, you want bullish candles to close near their tops. So no sell off at the end of the day. And we're looking to trade this up and down, and you can look at this as a range as well. Again, from this 200, this kind of idea until we get a breakdown or even break above this much later in the year potentially. So again, stay patient and look to play this. This is still, at this stage, bullish to me. There's still higher highs, higher lows. There still is an uptrend. You just want to get in at better prices, and you want to make sure that the trend is going to continue. Aussie USD, and this is what I meant as well with that news. Not necessarily that, or not necessarily that it's going to just continue to strengthen just because of interest rates. Comes down, and you might see a bearish close today or whatever, and then you see the strength coming in later the week. Very, very common. Again, you want to wait for the odds to be in your favor. So area to look at, 0.68, even spot 67. So you're looking for this kind of idea. But with the interest rate news, I would scrap this idea. I would be looking for price to break above, settle back in this area, and then the continuation back up. So again, staying patient. No reasons for the stop there. You're fundamentally going against the grain. You're going against the clues, if you will. So I'm not looking to short there anymore based on the news today. As I said, it could take some time to do this, but when you get a break above, you then know that fundamentally things are in your favor. So breaking up, retesting, and then hopefully getting a continuation back up. USD CAD, I've kept these on, and I'll go through this from my weekend. So what I was saying is you've got this little double top formation, which is bearish. So what I was looking for is price to break below this 55, below this 1.33 area, 133,600. You can even make this a little bit lower, 133,500, anything in this kind of zone. So you're waiting for this to break down, pull back, and then continue back down. Big area for this pair, 1.3, big round psychological number. This is a massive area for this pair, 1.3. So if this turns around there and starts breaking up, opportunities for a long. But at this stage, also with the stronger oil price, keep an eye on oil with the for CAD. Ash saying 4 hour looks good on CAD. I'll have a look at that now. So I'm looking for that breakdown there. Let's have a quick look at the 4 hour. Ash's recommendation. Ash, I presume you're looking for a short, or you're looking for a long? Short, yeah. Yep. You can see there, big 200. What you want to see is a break below that. You could wait for the pullback. It's a 4 hours, so just keep that in mind. Maybe a little evening star for those of you that know your candlestick formations. Even saying like this, if you can get it moved back up to all these EMAs over there, this kind of area, remember that breakout area we spoke about last time as well, and then looking for shorts from there. So pressure is coming from the top, so selling pressure. Yeah, Ash saying he was looking for all the EMAs, so I presume this is his setup. So you're looking for a bounce back up to these EMAs, multiple reasons for the stop. Breakout area over there, and you're looking to short it. If it breaks below this 200, you could start looking for shorts targeting this 55 or the big area I was speaking about earlier, the 1.30. So keep an eye on that one on the 4 hour for those of you that have some time. Again, main thing is pressure is coming from the top, selling pressure double. There's a big break. For those of you that, if you think back to some of the charts I've just showed you, especially I think it's oil, you've got the initial move down, double top, so it tries to get back up, and there's the kind of give up, this kind of big move down there giving up. So that's what you're playing on. So move, and this is what you get a double top potentially. USD Swissy, you can see dollar strength today. So what we're looking for is price to come back into spot 9.3, and potentially based on everything we've just spoken about with Dixie and the clues, looking to short it from there, even spot 9.4, so opportunity for split entry even. Anything in this kind of zone there, see this is a big area you're looking to short. And of course, if we see continued dollar strength, you're waiting for that breakout. So breakout of this big area, a retest back into this area, and then hopefully the continuation move back up. USD yen, good area for long for me, 136.600, even a little bit lower, 135. The USD yen does like round psychological numbers traditionally. So anything in this zone again, you're just waiting for a nice classic M2 breakout, pullback, then looking to long. If for whatever reason you see continued dollar weakness, wait for the break below, and then of course just plan B, breakout, pullback, lower. So this looks bearish today. Normally when you see the dollar strengthening versus the other majors, you'd see it weakening versus the yen. So just keep that in mind. New Zealand USD, a little bit of a simpler setup. We've got the big breakout. What we're waiting for now is classic M2 pull back into this area, spot 6.2, nice round psychological number, and then continued move back down. Again, have a plan B in place, keep an eye on the DXY. We get dollar strength, could happen quicker. If we get dollar weakness, look for the break above, pull back, and then targeting these areas at the top is 200, these 200s we spoke about last time. Just zooming out there again. So plan A, dollar strength, plan B, dollar weakness. All right, let's have a look at the crosses. Euro pound, a little bit easier setup again. Got a nice breakout, pullback. Some of you might have got this there. Well done if you did that. That was 26. Hopefully this gets a little bit lower. If it gets back in there, 86500 where you want to potentially short from. So the breakout, that was the pullback. You can see it got to the 55. That's why I say some of you might have caught that one. It would be on break even now, I think. So that's a nice little setup there on the euro pound. Euro CAD, this is a little bit messy at this stage, stuck between these EMAs. But what I was saying is if you get a break below this big area, you get the pullback, 1.43, big round psychological number, even a little bit higher, spot 4.4500. We're looking for this continuation move back down. I was saying if you get a break above this 55, these EMAs are turning down, so it might be a little bit tricky, but you're essentially looking for a long and playing this like a range, 180, 190 pips. So that's potential, just like I was saying, this 55 turning down, which might make it a bit messy. Euro Aussie, one of the setups I was showing you over the weekend, and it looks like it's working. I said this big area over there at 1.62. Let me just get to that. Ash saying oil cuts could mean CAD strength. That's exactly what I was saying. Yeah, keep an eye on oil. If you see oil strengthen, CAD more than likely to strengthen as well. Another piece of confluence for the CAD. But Euro Aussie, I was saying this big area at 1.62. Price try to break out, pull back in, and you can see there, those of you that are observant would see what I was showing you earlier, the big move, and then you get this little top and that little top, and then you get the give up. So the initial effort, first try, second try, and now it's breaking down. And I was saying, look for pull back into this area is a counter trend trade, so just keep that in mind, and look forward to target back down there at 1.58. So quite a few setups look like this. Failed to break out, that we could call that a fake out because it didn't continue. Double top, and then there you can see the breakdown below. If it pulls back a little bit to this 55 again, look for that short. It's a nice little range you can play there. Aussie CAD, a bit of a simpler setup again. Spot 90, big round psychological number. Be careful though with the Aussie strength with the interest rate news. So I would be patient with this one. Look for price to really slow down there, get some bearish signals, and then looking for the short. You can see there big areas. You've got the breakout, pullback potentially. And as always, plan B, we're going to get continued Aussie strength due to that interest rate increase. Look for the breakup and then pull back into this area. And then targeting this 55, 200 again, potentially as a continued trend. Pound Aussie, again, you can see, look at this today of that interest rate news. So we had opportunity short from 1.91, previous big area. I might have missed that one, unfortunately, but you could look for longs at around 1.81, 1.85 on the shorter time frames potentially. But again, I would not look to play Aussie weakness anytime soon now, based on that interest rate news. The area to focus on for me, 1.81, 200. Anything in this kind of zone, multiple reasons for the stop. Big area, interesting area to long in. Pound CAD, similar setup that I was showing with the Euro Aussie. You can see, try to break out, failed, came back in, tried again, came back in, and there you get the setup over there. Again, counter trend trade. It is really interesting trade over there. 1.67, targeting this 55, 200 at the 1.62, 420, 62, 500 area. So same kind of idea. Tries to break out, comes back in, tries again, and now falls back in. Counter trend trade back to the bottom of this kind of range that formed over there. Down Swissy, I was showing you guys this channel, it's a trend channel over there, trend lines. And I was saying if it's similar concept to what we've just spoken about, tries to break out, fails, comes back in. You can see if this fails again and breaks back in, especially below this 55, I'd be looking to short, and I'd want to short it to the bottom of this channel line. Again, just be conscious that it's subjective. So just because I put these lines on doesn't mean it's correct. It's just what I'm seeing, but it does look pretty obvious. This one to me, it does look pretty clear. So I'm looking for a break below this 55 and then a short to the bottom of this channel. If for whatever reason we get this big breakout, look for a pullback and then along the standard channel theory. So you can see nice consolidation, and now we're looking for it to either pop out above it or fail and fall back in and go to the bottom of this channel line. That's the pound Swissy. Right, the New Zealand dollar and the yen. What we're looking for there is, you can see it's starting to form similar to what we've just spoken about, a few of these setups, guys. So that's the initial move, it fails, so it doesn't continue. We had this little double top there potentially. So you can see double top fails. Now we're looking forward to break back into this range where we got this kind of range over there at the 8083 level. So looking forward to break back in below these EMAs, pull back in, and then move down. You can see they're already buying, selling pressure coming in yesterday with this big wick today. So you need to stay patient because it could shoot right back up. We of course never know, but to me this looks like it's going to fall back into this range, and then we can look for shorts to around the 8083 mark. So blue is telling us that there's a lot of selling pressure, big wicks. So we're looking forward to kind of give up, just like we had with the pound CAD. So the similar idea, there's the give up, then it starts to fall back down. All right, then Aussie New Zealand, again, Aussie strength. So not looking to short anytime soon, looking to long from one spot 08500. I don't know if this is going to give us the entry opportunity to look on the smaller time frames for entries potentially. I'm going to go to the 4 hour, see if we can see something there. See there, look at that big news candle over there. Nothing anywhere near price for a stop. Let's go even lower. And again, this would be if you've got time. It's not for you, those of you that just trade off the daily. You can see on the 1 hour, we have 55. So you've got opportunities potentially with a bit of a channel line for a long at around, sorry guys, this chart is not that neat. You can see, looking for reasons for enter. This is on the 1 hour. We have to keep that in mind. Gets down to one spot 089, one spot 090. Looking for longs. This is on the 1 hour. Otherwise, on the daily, wait for your A grade areas, one spot 08500. Anything in this area there to continue. But again, Aussie strength, big news. Expecting a second leg up at some point before it gets down to this area. All right, and I think that's my setups for the week. This is CAD yen. I don't know if I looked at this over the weekend, but look at parity. If it gets back to parity, 1-to-1, 100. Sorry, I think that's parity. Confusing myself there. Look at the 100 level. Big round psychological number. You can see the breakout. If it gets pulled back into this area, look for the continuation back up on the CAD yen. Okay, and finally, we have a quick look at Euro Swissy. This is parity 1-to-1, 1.0. We've been showing you guys this for quite a while. You can see the consolidation that's happening the last couple of weeks. This extremely tight consolidation. Just because it's not moving sideways doesn't mean there's not consolidation. So if we do this even, you can see they're same as the the Swissy pound, tight consolidation. We're playing the probability that it will fail, but we keep an open mind. If we get a big breakout of these channel lines, the theory is breakout retests the breakout area and then potentially has the big move. And when it does move up from this pullback, usually you get a big move. And those of you that have been following my posts for a while know that I'm looking for a break above parity at some point for a big move back up. You can see all this move throughout the last stretches of COVID. I expect it to at some point retest this kind of breakout area over there. Peter asking, what is your idea on the pound yen? Let me just see if I've got pound yen.
I could do that one.
Okay, great. I'll leave it to you then. Okay, guys, any other questions on the M2s I've shown you? Ash will look at the pound yen. All right, Ash, take it away.
All right, thank you, Thinus. Hi, everyone. I'll just share my screen and let me know when you can see it. Can you see my MetaTrader? Yes, says Rudolph. Okay, I think Thinus, you have a question. You mentioned in the last post you add the pivot points to monthly and weekly charts. I've seen the PV on video and on SkyTimer how to add them. Can you explain how it's, sorry, what's PP? Pivot points, I guess, and what exactly are pivot points? Basically, the strategy they are looking at is the M3, I believe. because what it is it's the pivot points. You're looking at the weekly pivot and then the daily, the monthly pivot on the daily time frame. So you basically mark them both, and then so you do this, and then you go on the 4 hour and you mark the weekly pivot, and the weekly pivot is here, and then the monthly pivot is in here. So what you do then is basically you go on the 30-minute time frame, and then you're using the signal strategy to enter your trades. Now, there is a way. There was one of our members who was kind enough to show us how to have these the weekly and monthly pivots to be moving according to the week. So because we had to basically move it manually every week, because the weekly pivot moves and so does the monthly pivot. But he's found a setting to basically make MetaTrader move it along wherever it moves every week. So there is a video on that. But basically, this is the M3 strategy. And usually the best scenario for the M3 strategy is when you have the weekly and monthly pivot together. So you would prefer this one here to be here, where price is right now. And what you would do is basically wait for consolidation near this area, and then for it to give a signal for a sell. So over here, and then you would basically put your stop loss above both the pivots, and it would be quite good when they're together because your stop is not that big. So it could be like 30 pips or 20 pips. And then when it gives a signal, you basically take the trade and then you're going in the direction. So that's the M3 strategy you were discussing there. And no, these are not EMAs. These are just the pivot points. So they move along the week, every week, the weekly pivot. The monthly pivot, I think, stays in there for the month, and then it moves around according to what the price is. The EMAs, you can see them here. If you hover around it, these are basically the EMAs on the 4 hour, and you will see them over here as well. You can see the 200 daily there. So kind of the same thing what you see on the M2, but on the Earth and Sky, you kind of see them all together, which is why you have a lot of lines. And then you have the weekly support regions as well, which kind of help to take a trade or even take profit. I hope that answers your question.
Just my 2 cents there, Yolanda, as well. The pivots, the monthly and weekly, I was looking at, it's specific to the Earth and Sky template. So if you have loaded your Earth and Sky template, you should see that as your default view. So typically you would use them as good areas for target. So if you're shorting, for example, weekly support point, and if you're longing, in this case, weekly resistance mark. So as Ash was showing, if you just if you manually put a line on your chart and you go to the M2 template, which is remember, it's a different template, you'll have the weekly pivot points. So it was as simple as that. It's nothing special.
Okay. Yeah, he's understood that now. Okay, cool. So I was just going to be going a bit more on Thinus's point about seasonality. This is a website I shared, I think, last year. It's called SeasonX. And they are basically same thing what Thinus gave the website, but this is a bit different. It kind of it has data over the years, so up to 23 years, I think. I think you got to pay a bit more if you want to use other pairs. So Euro USD is free on this one. But yeah, it's the same thing what he was showing us earlier, that the euro is expected to drop around this time in June. So you can see that it's declining, and this is based on the 10 years of data that we've had from 2013 to basically now. So euro is expected to drop around this month, and then as you were saying that in August, it's gradually rising, end of July, and this time. And then usually in January, you can see that the dollar usually gains strength against most of the currencies. And I guess that's just to do with seasonality and, like what just Thinus mentioned, different portfolios and stuff like that. So yeah, you can use this website as well there to add to your list. Um, and then based on this cash rate, I was just speaking to a client yesterday, and I was saying to him, I think they're going to raise interest rates. And basically, you kind of had a clue they might do it because last week, if you had noticed, the Aussie CPI actually came higher than expected. And as we know, they have been mentioning it all the time in the rate statement, even the one they released today. They had said they want to bring the target to 2 to 3%. And this was kind of not expected by them. So because it came out higher than expected on the Aussie. So this gave us a clue that the Aussie would most likely raise interest rates this time. And they did that. So the 25 basis points they did it by. And then if you go on the rate statement, you can see there's some of the comments. You said they basically the inflation is peaking, so they want to try and control it. And you also mentioned something about it's going to hurt the housing market and mortgages because the rates are increasing for monthly payments. So it's going to slow down the economy in Australia, which might not necessarily be a good thing because it's going to limit the spending. But I guess we're seeing that in most of the countries. So it's kind of not something new that we are seeing. It's across all the countries. When I went to Croatia as well, a couple of weeks back, it was the same. It was quite expensive down there for most of the things. So regarding the setups, I just want to go over the pound Aussie first because I had kind of had a setup here yesterday because I saw the breakout on this on the trend line on the daily, and then I wanted to short it over here. Now, the perfect timing is the news, so I could not really take it because I didn't want to keep the trade around the news. Firstly, because I did put the forward order in here where my alert is, just here. And basically, when yesterday the price did come up around here, it's the daily candle close, and that was just too close to my entry. It was around 30 pips, so I just deleted it. And because as you know, the pound Aussie is a very wild pair. So I deleted it because I didn't want to get taken out in case it just goes through. But the technical analysis showed that it was a clear short. And also we can delete this fib now over there because we have broken the 78.6 fib and come towards the 100. So now you can clearly see the bias is a short. And even though if I had an entry there, I would have probably missed it anyway because it did not really touch the trend line in there, as you can see. And yeah, that was a quite good move. That was 190 pips. So yeah, I don't know if anyone has caught that one. But yeah, that would be a region again to sell in. 50 pip stop you need and a very good target. And then I was looking also the other way to take a trade. It could be a day trade because you can see that it is also an area of support, as you can see in the past. So I'm waiting for a confirmation, not entering here just yet, but I want to see what it does. If it consolidates down here and then gives a signal, I could use the M3 for that signal to go up, then I could look for a 54 pip stop again and may possibly 150 pips back to this region here. As you can see, there's a lot of spikes. So that's something I'm watching. And the pound yen, just remembered. So the pound yen is, where is it? So we're here. So right now it's not very interesting where it is because it's just too high up. The area I would be interested would be over here in the long term for the long. The governor just came out today saying there was some news on that. The Bank of Japan, he said to continue quantitative easing until achievement of inflation target. So this could be a few months now down the line. So I expect yen weakness to go forward. But yeah, looking at the M2, you would be looking anywhere around here, but that's quite far away. So, I mean, we don't want to wait that long. We might not get there just yet. Looking on the 4 hour, the EMAs are too far apart. But I was looking at this on TradingView because I like having my charts sometimes analyzed without anything. And you can see that now it's a bit more clear. And this is the kind of setup I'm looking for on here. So 171,700 area. And you can see the price broke out, consolidated, and had a lot of spikes in here. Buyers are pushing through it. So you can see that there's clear buyers in this region over there. So if it comes down in here, I've set an alert just above the area. I will be looking to buy this. So around 70 pips stop, I would say, yeah, anywhere around here, being a bit fuzzy, but yeah, 70 pip stop. And I would look to target back up to these highs. So around 260 pips. So very good risk reward, 1 to 4 almost. But yeah, that's the kind of area I'm looking on the 4 hour on there. You also have the 50% fib in there, and let's see where the 200 is. So the 200 is kind of creeping up in here. So it would be nice if that comes in here, and then my stop will be under the 200. So another confluence. So at least three to four confluences there to take the trade. But yeah, that's the setup I'm looking for on the pound yen. And why have you? So Justin is asking, why have you drawn the trend line where you have on last example? It cuts through quite a few candles rather than at a weak end or body end. I'm assuming this is on the pound Aussie you're saying, Justin? Yes, one before this. Well, this trend line is based on the daily. So it's touching my wicks, as you can see there. Now, of course, if you go on the shorter time frames, basically, the wicks, what I'm trying to say is the wicks, this is the daily time frame. So the candle can close above the trend line. So that's what you can see here. But on the 4 hour, obviously, you can see that price action, the candle closed below, and then it went higher and closed above on the daily. So that's what you're seeing on there, basically. So it doesn't make a big difference. You need my time frame, the daily time frame. So I have the trend line on there. So for me, that's pretty good enough. It's pretty accurate for me. The lower time frame obviously has more noise. So the trend lines, obviously, the lower the time frame you go, they are not as effective. Of course, the daily time frame is quite effective, and you can see there it broke and almost did a pullback to the trend line, as you can see there. And then we had the move down. Yep. Okay. And John is asking, how do you see Aussie yen? Yep. This one here, the Aussie yen is actually on the earth and sky. So, I mean, on the M2, we are looking down in this region where the 200 is. But yeah, I'll just go to the earth and sky pairs because we only have about 6 minutes. So the Aussie yen is the first one. So there you go, answers your question. I'm looking in this region at 91,730 and 91,88. So the area that favors me is this. here where the 50% fib is, because you have the weekly pivot in there as well. So you're looking for around a 45 pip stop, and your potential target there is 150. So make sure to use these weekly resistance if you're doing Earth and Sky as targets for take profit. And of course, if you want to be more conservative, if you want to have a second entry, then you could also look in this region here where you have all the EMAs and weekly support as well. But I would prefer this one here because you have the 55, and I think this is 55 and 34 moving average along with the weekly pivot, 50% fib. So yeah, looks quite good. 50 pip stop for 150. So 1 to 3 over there, and potentially even more. So that's why I will look for the long on the Aussie yen. CAD yen is near the entry now, but hovering around here. But you can see the weekly pivot is not as close as it is on the Aussie yen. So I would prefer the Aussie yen instead of the CAD yen. But obviously the CAD yen on the M2 I prefer at the 100 level where Thinus was showing you. You have all the moving averages down here on the M2. But over here you would be looking for a long around here at 103, 500. So 50 pips stop and same 140 pips ish on there. But for the reasons I mentioned, I would prefer the Aussie yen on that one. Then the euro pound, we have clearly seen it has broken out of these EMAs on the weekly, and it looks bearish now. But I do have a support line here because I'm just more conservative on it, and you can see why. It bounced off this support region here, and you can see that it's done that before. So I don't want to fake out and trying to sell right in the face of it, because there's not much risk reward here. It's only around 50 to 60 pips, but I want to catch the big one. So if it breaks below this, then I will look possibly to take the short, because then you have a lot of more room. So around 230 pips in there. And I remember this time we used to, a couple of years ago, we used to keep shorting it down here, and it was just a really good setup all the time. But yeah, so if it comes there down there, then we will be looking for shorts on that one. And that's the same kind of a thing you're looking here now. So keeping that in mind, the risk reward might not be there, but you could give it a go around 30 pips stop. You don't need a big stop, and you're looking around 80 pips max right now to this weekly support. So that it could be a setup that could work. And then the last one for today is the New Zealand CAD. So on my M2, you can see that I have the setup all the way up here, the A grade. It's on a down channel. You can see that I have my stop above the 78.6 fib, entry near the 61.8, and a lot of EMAs and moving averages down here. And the Earth and Sky is a bit different, a lot lower than what we are seeing. But you would be looking to enter anywhere around here, put your stop there, 40 pips, and you're looking around 70, let's just say around 90 pips on here. Again, the weekly pivot is not where we want it, so could be a roadblock. The M2 looks a lot more cleaner, but out of all these pairs, I probably prefer the Aussie yen. Gives me quite high probability on this one. Any questions? Before we go. Yeah, if not, then I guess all over to you, Thinus, to end it.
Yeah, thank you very much, everybody, as always, for the time. Any other questions to me or that you thought of in this interim? All right, Yolandi, I think the running a little bit out of time there. What I'll do is I'll do a little recording for you, and then I'll post it in the forum, and then you guys can download it and look at it at your own time, if that's okay.
Yeah, that's fine for him.
Perfect. All right. Thanks, everybody. Appreciate it. Keep well. Have a good week. Ciao.
Yeah.